Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted.
Good evening, ladies and gentlemen. It is the 56th episode of the CEO Show. Tonight it is 17th of, is it October? And not really October, it is September. and we are really excited to have you tonight. Remember, this is a show that always comes to you every Tuesday from 7:30 to 9. And the main aspect of this particular show is to educate you, is to give you insights, and also to motivate you in different industry. What does it mean? It means that we are always looking forward to bring you different personalities, trailblazers, and market leaders as we talk about different issues in the market and in different industries. And that is the main objective of having you. So tonight we have another amazing episode prepared for you, and definitely with an wealth creation using different ideas. And specifically tonight we're talking about the smart ways of creating wealth. Is money wealth or wealth? Who is our guest tonight? Our guest tonight is none other but Mr. Joshua Kipchumba Chelalang, who is the founder and also the CEO of Ebenezer, who is passionate about helping people make smarter ways of making money and also making choices with regard to money and building wealth and also to secure our future. We are ready to talk about money matters tonight. Welcome, sir, to the show.
Thank you, sir.
It's nice to see you again.
Thanks
after
for
a very
having
long
me on
time.
the show.
After a very long time.
True, it's a long time.
The other time we did episode number gapi, if you can remember.
It was episode number 1 to myself.
Yes.
And maybe in the company.
Yes.
It was episode number.
And tonight we are doing episode number 56. We are
Wow.
glad to have you tonight.
Wow.
But let us, before he introduces himself more and tell us more about himself, and and also on TikTok. Don't forget to comment on the comment section and also share this particular podcast for somebody to know that you're watching. And also in the course of this podcast, forget to ask a question regarding wealth and also wealth creation as we make this conversation flowing. Because from your comments, our guest tonight will be in a position to respond to some of your questions that you'll be asking. Don't forget to share this and also tag a friend for him to know that you're following this. Mr. Joshua, how's it been?
It has been good.
Okay.
I really enjoy my time.
Yes.
And I thank God
Okay.
for the gift of life.
Okay.
And I'm also privileged to be in your show.
Yes.
Thanks for hosting me. I'm so delighted.
Okay.
Yes.
People have been looking forward to this show. How do you think about tonight's show? What are your expectations?
My expectations are so high and the rest of your life.
Okay.
So people called me and told me that what is it about the show?
Yes.
And I told them that it is going to be wow and they are going to enjoy it.
Okay.
Yes.
Now, just a small introduction. I know I've mentioned a little bit about yourself, and last time we dug into your journey to where you are, but tonight, just a small introduction, who you are and what you do.
Thanks for that question, Mr. Dan. I'm Joshua Kipchumba. I was born and raised in Moiben Kuserwa, Marakwet West constituency,
Yes.
LK Marakwet. Then thereafter, I joined university in Jomo Kenyatta University of Agriculture and Technology to undergo a degree course in business, science, and information technology. I did that course between the year 2002 and I graduated in the year 2006.
Okay.
Thereafter, I worked in and I moved to the banking industry. That is where I spend most of my time working. So I worked in the banking industry for actually 14 years. And I got so many experiences. I started as a junior and graduate staff. And I served the bank in various dimensions. I started as a marketer, direct sales representative. Then I went to customer service. After customer service, I served the customers as a front office teller. Thereafter, I also served the customers as a credit officer. And I rose in the bank to a cash officer, then branch operations supervisor, and then branch operation manager.
Okay.
Then in those 14 years, I felt that maybe it was wise for me to step out of the bank and maybe try something new for myself.
Okay.
I felt that maybe I've gotten enough experience and expertise maybe to grow something for myself and also for my empire. And thereby now I'm here outside here as a consultant and then also as a real estate manager.
Okay.
That's the areas that I normally deal with, consultancy and real estate investment. And that's me.
Okay. Wow, wonderful. Good introduction. I think now our viewers know who we are hosting tonight, and
Yes.
we are so delighted. Now, directly, because I know our time always flies whenever we are here. But now, the question that I would wish to ask and start with is, what is money and what is wealth? And what is the relationship? Is money wealth or is wealth money?
Thanks for that good question.
Yes.
Normally people confuse wealth for money or wealth for income. There is some difference between wealth and income. But both of the two items are interrelated. You cannot mention wealth without mentioning income. Income, accumulation of income makes up wealth. Income is money gotten maybe in a daily business transaction, weekly business transaction, or even monthly business transaction. So money can be gotten in terms of salaries. Those who work for salaries get wages, and those who are in business get profit. So those who are employed, they get wages at the end of the month. And those who are in business, they get profit at the end of the day. Now wealth is properties and assets which have been accumulated over a period of time. When you accumulate your money, when you accumulate your profit, your wages, you will end up having wealth. And this wealth can be stored in form of assets. You can even buy and stock. You can even buy bid bonds. You can even put the money in the money market. And there are some differences between money and wealth. And when we say wealth can be defined in various forms. We can have different types of wealth. There is financial wealth. There is time wealth. There is mental wealth. There is physical wealth. And also there is a social wealth. Those are the examples of wealth.
And when you talk about the four, what you've mentioned, talk about social wealth, financial wealth, and all those kinds of, in what order of priority, and what does it mean to a person if you break down the four of them?
When we say somebody is wealth, one cannot be wealth alone by becoming stable financially. It is an holistic view of wealthiness. If I can say today Dan is wealth, it doesn't mean that you are wealth because of the resources or money in the bank. You can be having money in the bank, but at the same time, you are not mentally wealth. So wealthiness encompasses actually 5 areas. The financial wealth only deals with the money or assets that you have. But also there is an aspect of time wealth. You see, in time wealth, it is the freedom you have with your time. Being able to use your own time freely. So if you can manage your time also, that's a wealth. Number 2, the social wealth. The social wealth is in terms of relationships. How do you relate with your family? How do you relate with your friends? How do you relate with professionals? And even the entire organization, how do you relate with? Because they say charity begins at home. You are not wealth if your family is not united. You are not wealth if you don't have that social aspect. So social wealth is very important. Number 2, the mental wealth. The mental wealth is all about your mind. The peace of mind you have, it's a wealth. And then also the knowledge you have in your mind. So if your mind is at peace, you have that emotional intelligence, then you are mentally upright. And then also a very important one, your physical health. Your physical health is very important. They say a healthy nation is a wealth nation. So if you are not physically well, you are not healthy, then even the resources in the bank won't help you. So it is important that you check on all those parameters and also all those aspects, the social, the mental, the physical, and then also those things are very important when it comes to wealthiness. And then also you find that your relationship, how you relate to people, and then also your social networks is very, very important. Because if you have good friends, if you have good network, people you associate with, those cases can inform how wealth you can be. So never look wealth in one dimension as financials only.
Okay.
Look it in the other 4 areas.
Okay. And now, how do you achieve now this equilibrium? Is there a way that you can say that sometimes we have social wealth, we lack financial wealth? Is there a way that you can say that sometimes somebody has good health, that is physical, and it becomes a challenge when it comes to financial? How do you achieve this equilibrium to ensure that all this is at par or at balance?
You have to balance. You have to balance all the aspects of wealth. You have to balance your health. You have also to be mentally upright. So when you balance all these aspects and make sure that, you see, when you have a very good relationship with your family, those are the people that you lean on. So if you can balance all these aspects, at the end of the day, it will be easy for you to look for money. It will be easy for you to look for wealth. And then also the social networks. The social networks will give you the opportunity to make money. The friends that you have, the people that you have will enable you get wealth at the end of the day. So you cannot mention financial wealth without putting all these other things in order, even the mental health. If your mind is not stable, if you don't have that peace of mind, it will be difficult for you to make money. The ultimate goal is to have the financial stability, to have the property, to have the assets, but it will need all the other areas to be balanced in equilibrium.
Okay.
So that you can make money.
And somebody say that your network is your net worth to some extent.
Yes, your net worth is your net.
Yes,
your network.
is your net worth. Now, looking back to the journey in terms, you've been in the banking industry and the experiences in real estate currently. What are some of the lessons that have come in handy in the journey of you learning about wealth creation and also financial stability? What are some of these lessons that are so dear to you over time?
I can say, Mr. Dan, that there is a reason as to why I went through the bank. And I really thank God. The bank was an eye-opener to me. It was a game changer to me. When I was in the bank, I learned so many things that it made me to be the person who I am today. When I went to the bank, I learned some operational skills on how to make money. I learned also customer service skills, how to handle customers. I also learned interpersonal skills. And when I was in the bank, the experience that I got from the bank is that when you are in the bank, you are in a place whereby so many businesses converge. You'll find that in the bank, there is somebody who deals with agriculture, there is somebody who deals with industrial products, there is somebody who deals with entrepreneurship, importation of spare parts, sale of clothes, and all that. And that one, to some extent, informed my decision on how to become a business person. Also in the bank, we could get somebody who used to get income through real estate business. So the bank gave me the experience, it gave me the capital to start a business, and also it made me to be somebody whom I can work with staff in my organization. It gave me the interpersonal and also people's skills, and also the customer service focus. And then when I was in the bank, I learned that actually a A student is working for a C student, if not a primary or a secondary dropout. You find that the money in the bank doesn't belong to the bank itself. The money in the bank belong to the guys who are in real estate, who are in rental income, and also those guys who are investing money in stock market, in shareholding. My third year in the bank, that is when now I learned that actually, and we are trying to manage money for actually shareholders. There are so many people who pool resources in the bank in form of shares. Actually, the bank is a liability because they take deposit from customers. They take deposit from customers and they lend this deposit to our customers. Where does this deposit come from? They come largely from the shareholders who are putting money there so that they can make interest in terms of call deposit, fixed deposit, and what have you. So I learned that wearing a suit and also a tie doesn't mean that you are richer than a person who is outside there. Actually, the guys who are outside there wearing aprons are the ones who are owning the bank and are the ones who are employing us as graduates, master's owners, and also PhD holders. So we need to work smart. And that one opened and broadened my mind that the area to go is investment. We need to go an investment ways.
Now, before talking even about investment and how to invest and the options of investment, now, regarding the same, we are talking about wealth creation currently. And as we talk about wealth creation, are there principles that align to these that as much as I earn, as much as I am employed, as much as I'm running a business, is there a mode that we can say that I can do this? What are some of the principles that enable one to build and create wealth?
Creation of wealth is a journey. And it's a journey that starts way back. Let me try and to come this way.
Yes.
There are 3 stages of somebody's life. There is that life that you are between, you are born and also the year that you are in the university. That is between the year you are born until the year of 25 years. Then after 25 years, that is when you graduate from a tertiary course. Then thereafter, between 25 and 35, it is an area whereby people try to sort for employment, to look for what to do, to look for a job. And then after 35 to maybe 45, that is when now you may think of investing. So life has stages. The stage of looking for the job. You must first of all look for the job so that you can earn. So after earning, this money you earn them and you save them. After saving this money, then now you'll go to the journey of investing. You cannot invest what you love, what you have not earned. So you must first of all source for the job. And it is good for someone to look for a job. You can either look for the job or start your own business. When you start your own job, you save money in the bank. So for you to align yourself with wealth creation, you must cultivate that culture of saving. You must save, then invest. So savings should precede investment. And how can you achieve maybe your savings? Maybe you are in unemployment and the employer is paying you 50,000. You need to make sure that this 50,000, there is something that can actually go to savings schemes, which in turn will go to investment schemes. And then in the investment schemes, this will form the wealth that you need in your life. So wealth is a constitution of income. Saving your income well will actually make you to acquire wealth. And when you are employed, it is good to do a budget. When you have a budget in place, you will actually balance it doesn't matter how much you earn. Anybody who earns 100,000 and anybody who earns 50,000, all are the same. The only thing is that what plans do they have concerning their future? What plans do they have concerning their savings? So there is a rule that you can employ for budgeting purposes. You can use the 50-30-20 rule. When you get your money, for instance, you get let's work with 50,000 because that might look like the minimum.
Yes.
After getting this 50,000, 50% of that amount can go to basic needs. These are the
That
things.
is now 25,000.
That is now 25,000. The 25,000 will go to the basic needs that you cannot do without them. These basic needs can be food, rental income, payment of mortgage, school fees, and what have you.
Entrepreneurs, creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Value Markets. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. Hosted by Dan Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative Talks, CEO Insights, Success Stories, Value Markets, and Financial Education. This is the CEO Show. business minds, pioneering and inspiring entrepreneurs, creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. CEO insights, success stories, value markets, and finance.
So we're really sorry for what happened. We had some technical issues, but nonetheless, we just have to make this happen. I believe that we are back live and clear. If you're getting us, please tell us where you're getting from. And also, as we just appreciate some viewers who are coming in, Hilary Kiplagat Kibiot is saying that keep it up with the good work. Thank you so much, sir. And Judith Jones is saying that awesome work done. And our guest watching live from Nairobi. And also you hear Elvis Simeo is saying that Tukondani, Joshua Keitan, anasema watching live from Eldoret. Beautiful, expounded on wealth creation and many more. Tell us if you're getting us loud and clear, and also where you're watching from, so that we get this conversation going and we make it more better. And we are just getting it started. Our guest is none other but Joshua Kipchumba Chelalang, who is the founder of Global Consultancy, Ebenezer Global Consultancy Limited. And we're talking tonight about wealth creation and many ways of investment, but tonight we're talking about smart investment and many other things that surrounds that. And if you have a question, please don't hesitate to answer for guests. Mr. Kipchumba, we're talking about you're giving us a good model of planning and budgeting for your finances.
Yes.
Just if you can pick from there and then we continue. You're talking about 50, 30, and 20. You talked about 50. Now, what about the 30%?
The 30% will go to ones.
Yes.
Ones are those things that you can survive without them.
Mm-hmm.
And then also we go to the remaining 20%. The remaining 20% is that these are the money that you can subdivide into two. Mm-hmm. We have the savings, and then we have the investment. Mm-hmm. The savings, you can save it in the SACCO. Mm-hmm. SACCO are the best ways of saving money, especially for those who are startups, those who are newly employed. It is always good to have one or two SACCOs that you can put that money.
Yes.
Because you cannot save money in the bank. You can only put money in the SACCO so that this money, you can use it to buy properties. And there are three reasons why people should save money. You save money basically because of, one, because of speculation purposes. When you want to buy something, maybe like a property, one way of saving money is for speculation purposes. Number two, you save money for emergency. Just in case somebody in your family gets sick, or even yourself, you get sick, you are unable to work, that money can really help you. Number three is that when you lose your job, it is always wise to have like 6 salaries for you to be able to overcome life issues, especially when you leave your job. It's advisable that it is good to have money in a saving scheme for at least 6 months. And these savings that you are saving will someday form the wealth that you need. And the wealth that you need will give you the freedom that you need for your life. So the efforts you put today is the struggle you'll need tomorrow.
Okay.
So let us prepare for our tomorrow by saving wisely, investing wisely for a better future.
Okay. A good thing. We've talked about saving and also the budgeting issue. But now, consistency has a critical play in all this, because you find that January, people always are so excited about planning for the year, what we call resolutions for the year, that this is what I'll save, I'll adopt the 50-30-20 model. But how important is it for somebody to be consistent with what we call budgeting and also financial planning?
So it will call for a strategy.
Yes.
What you can do, especially for those who are employed, because I've said that you cannot put money in a bank and expect that money to work for you someday. You need to open a SACCO. Any SACCO which is regulated by the Central Bank of Kenya. Then when you go back to your employer, you fill what you call a standing order. A standing order is whereby You say maybe in my salary, 5,000 Kenya shillings will go to my savings scheme. And when you have that standing order, it will give you the discipline that you need. It's all about your self-belief, discipline, and consistency. If you have a self-belief that I'm going to make it, then you put in some strategies that will enable you to achieve what you've set for yourself. And you remember that you need to be specific with what you want. For you to save money, there is a specific call that you want to achieve. That call that you've set for yourself will be able to guide you on what kind of savings you require. And for you to achieve that call of yours, you must employ the three things. One, you need self-belief. Number two, consistency. Number three, discipline. When you apply those things in resource management, in wealth creation, by no doubt, you are going to be rich.
Okay.
Yes.
And now you mentioned something about and you've been talking about it, SACCO saving and all that. But now, there are people who believe in banks and there are people who believe in SACCOs. From your school of thought, which one? What are the benefits of SACCO? What are the pros and cons? Let me say that. And what are the pros and cons also of banks?
So let me start with the SACCOs. The advantages of a SACCO is that you are saving money there so that someday this money will be yours in a long run. It is easy to get a SACCO loan than to get a bank loan. A SACCO loan is just a click of the button. In a SACCO loan, if you save money like when you save money monthly, there are three advantages of a SACCO. Advantage number one is that you are pulling your resources together so that you can use it to form part of your wealth. Number two, when you save money, after every year, you are going to get dividends from that money you saved in the SACCO. Number three, you are saving money in the SACCO so that you can borrow that money from the SACCO. There are two ways of borrowing money from the SACCO. You can borrow money from the SACCO by looking for guarantors. If you are looking for a loan higher than your savings, you can always look for 4 guarantors. That's the standard way that SACCO operates. But also there is another one called cash cover. Cash cover is whereby you can borrow money below your savings. SACCOs always encourage you to borrow 90% of your savings. And then also you can borrow your SACCO money using the mobile banking. There are mobile hubs that you can use it to borrow loans from the SACCO. Then in the bank, when you put money in the bank, number one, that money is accessible to you anytime you want the money. So bank is not a good way to save the money. Unless you are in a business, and for those who are in business current, those who are doing and maybe a business like tenders, supplies, those with shops, for that person who is employed, I always encourage SACCOs as the best way of saving money. But for those who are still in the business, they have the ability to borrow the money from the bank because of their rich bank statement. Okay. So for you to get money from the bank, you need to have that regular way of saving the money. Because the bank will look for the ability. Do you have the ability to borrow the money? And that's now the difference between a SACCO and putting money in a bank. Okay. It's like an example of a SACCO is like a mango tree. When you plant a mango tree, you can always eat the fruits, but not cut the tree. So every year, the fruits that you harvest from the SACCO. Okay. If you have like maybe an amount above 300,000, the dividends that will come yearly from the SACCO, you eat two things from the SACCO: the interest from the savings and the dividends from the share holding that you have in the SACCOs. So it is good. And then also SACCO, you will not be able to access the money anyhowly. So SACCO is an healthy way of saving your money. Okay, but now somebody will just ask you outrightly, because we've seen some SACCOs lack the credentials of, let me say, lack the faith to the members, and we've seen some even closed down, and some even are fraudulently closed down. How safe are we when we invest in a SACCO? When deciding to save money in a SACCO, you need to do a wise analysis. You even need to engage a financial consultant. You need to ask questions. Which circles are good for me to invest? You can even search from your phone that you go to Google and search for the best circles here in Kenya. And a list will be given to you that will give you a circle with a very good reputation and also a very good interest to the shareholders that save in the circle. So you need to do a research. And when it comes to financial matters, it is always good to consult. Engage a consultant who will guide you on the best practices of saving money, the best institutions of saving money. And you need to go to the institutions which are regulated by the Central Bank of Kenya. Never invest your money in any other projects that are not regulated by the Central Bank of Kenya. Even when investing money in money market, you need to check those MMF companies which are registered and licensed by the CMA, that is Capital Market Authorities. Let us always check on the legitimacy of the organization. You need to do what we call a due diligence so that you ensure that your money are saved in a safe, secure place that you can be able to access it.
And now, that is now about saving. Are there any other ways of wealth creation that people can adopt?
Yes, there is. Another option, one of the options is savings in circles. Another brilliant option is the money market. In fact, the best way of creating wealth is the money market way. What do I mean by the money market way? You go to the brokers that deal with money market. You can save your money, for instance, like, let me use a company like Britam, ICA Lion, Jubilee Insurance. They always give the best and interest on your savings. They normally give 12.5% per annum per year. So if you have like 1 million, you'll be able to get like 124,000 if you can calculate it per year. So it's like you are getting per month 10,000. So it is good to pool resources. Take it also to money market. Money market will give you good interest. Another way is trading in treasury bonds and also treasury bills, which are at now 7.8% per annum. It dropped. When the economy is good, the treasury bills go down. The treasury bonds go down. Treasury bills are short term. You can save in treasury bills for 91 days, 192 days, and then the treasury bonds are the ones that you save, for instance, of 3 and 6 months, or even 1 year, 2 years, and so forth. So treasury bonds are long term. Treasury bills are short term. So you can go that route of buying stock. Another route is buying shares from companies. Shares are also good. You can go to a shareholding. You can open a CDS account, and then you engage as stock brokers, like the SIB, Standard Investment Bank. You can take your money to a stock market. You can take it to treasury bills. You can take it to money market. So if you want to take it to to buy shares of a company, like when there is an initial public offer, the IPO, like the time that Safaricom opened their own IPO.
Yes.
They opened it with around 9 shillings. Right now, and Safaricom is selling their shares at 29.5%. There is also the Absa Bank, which offer a very good rate on your shareholding. There is also NCBA Bank, CFC Stanbic Bank. You can go to the bank and ask them that I want to buy your shares. And they will tell you that, do you have a CDS account? Then you open a CDS account and then you engage. So it is always wise to seek a financial consultant so that you get the financial literacy that you need to make an informed decision.
Okay, because that's the next thing that I would wish to ask you about now, what you call financial literacy. And sometimes even our viewers tonight might be watching this and many of them are not even aware of what you're talking about. How can we boost our financial literacy and also to be aware of the right investments to do, and also with regard to where can you borrow from in terms of now financial literacy?
The best exposure is that you'll again go back to the financial consultant. And asking is good. Knowledge is power. The Bible says that my people perish because they lack knowledge and wisdom. So it's always good to ask, which are the best and financial practices that I can engage in? That's why now you learn about financial literacy, like the saving schemes. How can I calculate a culture of saving money? So before you engage into any financial matters, like even when you want to start a business, it is always good to have a consultant. In this life, one has to have so many consultants. One is a financial consultant. And then for those who are, you also need a doctor.
Yes.
You also need a lawyer. You also need a confidant. And you also need somebody to guide you in spiritual matters. For financial aspect, it is good to read also in business news, to go through the stock market. Even with your phone, you can learn, you can do self-learning by going to Google and you Google some terminologies like wealth, like income, like cash flows, liquidity. So it is good always to go an extra mile. We have the technology. If you want to grow, you need to leverage on the technology. You use the phone, you Google all these jargons, and you'll be able to know that what do I understand by cash flow? What's a liability? What's an asset? What is a money market? What is a stock market? And when you do that, you learn by yourself. There are things that you cannot learn from school. You will only learn few things from school. But if you are computer literate and you have the smartphone, always Google what you have.
Okay.
The Google is the richest place that it has answers to so many questions concerning finance.
Okay. Something crossed my mind. We were talking about the ways of creating wealth. Talking about, we've seen young people now going into what you call Forex. Is Forex a way of creating wealth?
Yes. Forex is a way of, you see Forex, people buy dollars. And then when they buy dollars, they sell it when the prices go up. There is FPS. So many youths engage in Forex exchange. And the quickest way to make passive income, passive money, residual income, is to use the Forex. You can buy when the dollar is low. When the dollar is 124, you can buy it and sell it when it is 129. You can even go to the bank and open a dollar account. Then you start trading in exchanges. So there are those who do business, especially for Forex. If you have a lump sum, like maybe you have like 1 million, you can buy dollars when the rate goes down. Then when the rate goes up, you can actually make a kill by selling it and making few coins for yourself. In fact, the easiest way of making passive income is by the use of purchase of dollars, the Forex, and what have you.
Now, in connection to all these that we've mentioned, from savings to stock markets and also to Forex, as you've mentioned, there is the issue of risk management, and this plays a critical role when it comes to choices of investment. How can one now ascertain the risk level of all this? Or are you of the school of thought that the higher the risk, the higher the return?
Risk management is very important when it comes to finance. Risk management is the ability to be able to control losses in your business. And there are so many risks that one has to understand. There is an operational risk. Operational risk is that maybe in your own operations, those who are in the bank, you make errors in the system. There is the market risk. There is the legal risk. Like now, if somebody takes you to court, you'll find that you'll suffer a legal risk. There's a reputational risk, which it's a risk that will make your company to be known for bad ways. So it's always wise to manage risk. How can you manage risk? There are 5 stages of managing a risk. The first way is identifying the risk. When you identify the risk, the type of the risk, maybe it's a reputational risk, it's an operational risk, it's a market risk, it's a liquidity risk, it's a credit risk, then you will be able to know how to answer that risk. Number 2, after identifying the risk, you analyze the risk, how the risk has affected your business. Then after analyzing the risk, you do what we call evaluation. You evaluate how far the risk has gone in your business. Then after evaluation, then now you go to monitoring of the risk. Before monitoring, you need to report the risk the way it is. Then lastly, after reporting the risk, you need to monitor the risk. So these risks are there. The risk of even cybercrime, the risk of even system downtown. So you find that there is a system issue. And when there is a system an issue, you lose some transaction across the way. That's why we need to learn more about risk so that we can mitigate the risk.
Okay.
And there are the solutions for the risk. Number one is risk mitigation. You need to mitigate the risk. Number two, you need also to avoid the risk. If there is a way you can avoid it before it happens. Then now, you can mitigate the risk. There are the ways of mitigating the risk by employing so many tools so that your business does not crash or go down. Risks can be even crisis. When there are the times of crisis, how can you be able to navigate through the crisis? Like the time we had COVID-19, so many businesses were closed and people were told to work from home. And therefore, people started going online. And I think even what we are doing here is we are leveraging on the technology and we are going online to show so many people that things can work online, the Zoom and what have you.
And now, because we've talked about all those ways of saving, now going to now investing and making the right investments, because sometimes it's not even about the money aspect of it, but now where to invest correctly. And we've talked about money markets and all that, and also forex and also saving and all that. But now when it comes to investment, which we always have a problem as entrepreneurs, as people in general, what is it that directs one to the right kind of investment, and what is prevailing in the market? Because everybody wants to invest where money is. Being in the property business and real estate, what is it that pushes one to invest in A and not B?
You need to check on the risk. And also, you need to check on the return on investment. If I buy this today, how long will that investment bring me money? For instance, if I have 10 million in my hand, is it wise for me to go and buy a plot and build rentals? Or is it wise for me to take that money to a money market fund? The answer is, if you build these houses, for how long are you going to get return on investment? Like if you buy the plot at around 3 million, then you use the 7 million to build the rental structures. So this calls for you to prudently learn on how passive investment work. If I build a house, that money will take me more than 10 years to realize the capital invested in that rental income. Number two, that money I will have to engage a caretaker to collect the rent from the tenants who are in the house. And the tenants who are in the house also have their own problems. They cannot pay promptly as it is stipulated. The best way to take that money, the 10 million, is you take it to a money market. You just go to the money market fund and you check the best money market organization which has good interest. Good interest, secure. For you to go and put that money in such a property, it is wise to take that money to a money market that will give you 12.5% interest per annum. That 10 million will pay you more than the rent. And that 10 million will not need any more supervision. When you put the money to the money market, it will require little or no supervision for you to make your interest on that money. So it is wise. Another option is going to buy a big land somewhere. it is not wise to go and buy a big land somewhere. It is good to take that money to a money market fund. And that money market fund will pay you monthly. Will pay you monthly. And maybe you can use that money that has come from the money market, the income, to buy now properties.
Okay. Now, because now it beats logic for yourself, you are in real estate, and of late there's been that discussion of investing in real estate or investing in money market and in treasury bills and bonds. But unfortunately, we say that if the economy is doing well, it is not the right time to invest in bills and bonds.
In real estate,
yes,
real estate. The interest from the real estate is more than the money market one. Because in real estate, you can buy a commercial property, land within the CBD. For instance, let me use somewhere like Chepkwanga in Eldoret. If you go and buy an acre in that area, because an acre costs for like 6 million, then subdivide that acre into quarter. When you subdivide into quarter, then sell the quarter at 2.5. You will get 4 quarters. So if you multiply 2.5 times 4, that is how much?
10 million.
10 million. How much did you buy the property? 6 million. So you find real estate. In fact, real estate, the richest people are in real estate. Real estate is an area that it pumps in money in large volumes. So real estate is, if you get it well on the real estate and you call for the areas that are marketable and areas within CBD, you'll make money from the real estate. Yeah.
And now, looking into it, can we summarize and say that this is a way of creating wealth for the future generation? Because by the time for you to get the return on investment, or it takes a lot of the payback period, if I can use that, it takes a lot of time. So it means that it is an investment for the future or for the next generation.
It's an investment for the future and also next generation, because along the way you are not losing anything. Like the money market and also real estate. This one will generate wealth. It will generate income, which will compound to be a wealth that will be used even for your 4th generation. If you register your company well, and you be able to do a very good succession planning. And succession planning means you try to educate your children. You try to educate your generation on the financial literacy, on the culture of saving, and also the best practices of saving and investing money. So if you want to grow your company, it is good to register your company, give it a very good name, and then invest prudently. And then now, you are bringing in an aspect of generational wealth. So you need now to show your children, even your wife, that you are in this business, and this one is a family business. You are building a family empire. So it is good. Never hide anything from your children, even your wife. It is good to show them how these businesses are doing. It's unfortunate that people don't realize that. People are ignorant that we are not in this world for more than 100 years. Jesus can come anytime. So it is good that when you do something, ensure that there is a very good succession planning for your family, so that they can be able to carry on, not even leaving this world. Also for the purposes of growing older. You may grow older and you cannot be able to manage your business as it is. So for you to make your investment to be optimally managed, it is good always to show someone that this is what I do, and these are the things that we normally do for our business to thrive. Show your children, show your family, show your wife. Don't hide anything. In our African culture, we always say that we don't tell our wives what we own, or our wives don't tell us what we own. It is wise that in this day and era, we need to be able to be at bar and know that this business is a family business. Even your bank accounts. It is good to tell your wife that I have accounts in various, because if something happens today, God forbid, your money that is in the bank, accumulated in the bank, will go to build government projects, and your children and your wife is suffering somewhere. So it is good, even if you are not telling them the balance which is in the account, but it's always even good to tell them that at times, I visit Cooperative Bank, I visit KCB, I visit NCPA, so that in case of anything, because we are in the world of uncertainty. We don't know what will happen tomorrow.
Okay.
We are not sure of tomorrow. And our tomorrow is what we plan today. There is no secret for anyone who is married.
Okay.
An unhealthy family, we have talked about social relationship. I mean social wealth. Your social wealth is growing your wealth even with your family. If you don't move in the same step with your family, then you might not achieve that aspect of social
But
wealth.
Kipchumba, now talking about, as we talk also about generational wealth and also handing over succession, let me call it that way. We always have this kind of mentality, and also as we talk about professionalism in business and in doing our businesses, sometimes we say that bringing the family into business, sometimes it affects. But for you, you belong to that different school of thought. At what point now do you have to involve your family to your business?
In fact, at the initiation of the business, you see, you are as good as your wife. You need actually to calculate that that conversation. You need to be having a conversation with your family concerning what you are doing. Always in a workplace, there is what we call work ethics. In work ethics, these are the norms that is written, that if somebody breaks this rule, that person can be suspended from their business. Nowadays, in our country, jobs are scarce. Jobs are scarce. In fact, 20% in the country are in formal employment. The remaining 80% are neither here or there. So we must know that the business that you are building a business for your generation, for your family empire. Even if you are to bring somebody from outside, an expert, you need to grow and ensure that the succession, this business will go to your family members. So always, to mitigate that, you need to set what you call work ethics, the culture of the work. And you do your work in a professional way. There is no nepotism, there is no favorism, there is no tribalism. You employ the ethics as it is. Also, when you employ it there, you do not mix business money and also family money. Ensure that even if the company is yours, like done, you get yourself a salary so that the business will have that continuity. You compound the profits, the interest of the business to build the business. So if you have good ethics and good culture, the business will work beyond the family.
And now talk about what you call now financial discipline, which is a very important aspect in managing and also creating wealth. Sometimes we find that we spend money emotionally, whereby today you are happy, you spend money the way you want, tomorrow you are limited, and the same happens. Financial discipline is a very important aspect. How can one cultivate and inculcate this discipline in managing their finances?
The secret is you work within your means. If you have it, you have it. If you don't have it, you don't have. So if you learn to work within your means and avoid impulsive buying, if you buy things impulsively, you will be able to sell something which is important in the house to pay for the basic need. If you have a very good budget, an informed budget, and you work within that budget, you have the discipline within the budget, and you work within your means, you be yourself. Never expect to be anyone else. Just work within your means. By so doing, you'll not go beyond what you are earning. And you will not use your money emotionally. So the only thing is setting up a budget, working within your means, and avoiding impulsive buying.
Now, before we go to a very brief break, and also as we respond to some of our viewers who are here, what are some of the habits that you think affects people from creating wealth?
Number one is knowledge about wealth creation. So many people don't have the knowledge about wealth creation. Number two is people don't have calls. You need to have a clear call as to where you are going. When you have a clear call as to where you are going, then now you'll work towards that call. So knowledge, call, and then also people don't want to risk. In fact, the best way to grow is taking bank loans. You'll find so many people say that I will not take bank loans. Bank loans. How am I going to pay the bank loans? And the only way to grow is taking a bank, having a held bank account. Then you take a bank loan. So I think those three things are the ones that make people don't grow. Ignorance of not having the knowledge of finances, which people needs to be educated. They need to learn more about financial literacy. And then now by so doing, they engage in best practices of saving money and investing.
Okay. As we'll be coming back from this break, we'll also be talking about debt financing as part of wealth creation, of which you've just spoken about it in a nutshell. But we'll go deeper into it because I'm saying our time is much spent, but we can't avoid or afford to talk about debt financing, which is a critical aspect, and many of us have been in that particular journey of debt financing and all that. But ladies and gentlemen, remember our guest tonight is Mr. Kipchumba Joshua, who is the founder of and also the CEO of Ebenezer Global Consultancy. And tonight we're talking about wealth creation, we're talking about investments, and we're talking about different way of investments. And this is the CEO Show. We're going to take a very short break, then we come back to continue and also to have the tail end of this discussion. Let's take a short break, then we'll come back. Welcome back, our dear viewers, and remember this is the CEO show, and our guest tonight is Mr. Joshua Kipchumba. We're talking tonight about wealth creation and also ways of investing, and we've had a lot of ideas and also informed decision on how you can create and also make the right investment. Just to mention a few of our viewers who are here, we are saying that Willie Torotich is saying that he's watching live from Mandera. We have Koech Brand who is saying Kazi Safi, the CEO show. Daniel Chisire is saying that he's watching, and many other who are still following this show. Remember to share this conversation for somebody to know that you're watching. And also, if you have a question tonight for our guests, don't forget to ask on the comment section, and he will be in a position to respond in the course of this particular podcast. Now, Mr. Kipchumba, talking about now debt management and also making the right decision when it comes to debt. A lot of people outside there, and of late, somebody was mentioning to me that these yards of auctioneers are full. What is happening in our society?
I think the problem is about decision making concerning borrowing. So people borrow money without having a clear set goals about the borrowing. And it all boils down to budgeting. If you want to avoid debt or being listed in maybe CRB, you need to make use of your budget. If you make your budget, if you create a very good budget and work within your means, you'll avoid engaging in debt that is not necessary. Like you are saying the truth. There are so many cars which are built to the yard because of they have defaulted the loans. So many houses have been auctioned by the auctioneers. And there are so many things that are happening in our nation concerning debt management. So the best thing is that if you create a very good budget, and then you work within your means. And then also, if you eliminate loans which are expensive, if you pay off, the best way to deal with a debt is to pay off things which are loans which are expensive, which has big interest rates. If you eliminate them, and then now you come back to your normal financial position, you'll avoid that issue of auctioneers pulling your vehicle to the yard, auctioneers selling your home, being listed, and then also working within your means. Because so many guys are in the loans, bank loans, HAP loans, so many loans, left, center, and right. So this boils down to financial planning, budgeting, and then financial literacy. And then also another way of is engaging in passive wealth creation. Like when you're employed, can you have something else that you can do other than being employed? Because maybe you are only relying on the pay slip. If you can create some passive or residual income, so that instead of you being a slave to the borrowing, you can create wealth somewhere, that wealth will work for you someday. So it is good to check on things which when you can do, it can enable you to walk away from debt. And this is all about wealth creation by using the passive ways. You can even leverage on the technology, what you are good in. Maybe you are employed somewhere, but also you can do something online for yourself. if you can leverage on the technology, it will enable you to walk away from expensive debt. It will enable you not to lose your car to auctioneers who take the car to the car bazaar, to the car yard, and also the auctioneers who can take away your home. And then it is not a must for you to have a very luxurious vehicle or to live in a very big mansionette, which is way, way beyond your budget, or something which is beyond your capability. Always learn to work within your means. Even if you buy the plot and live in a house which is small and manage your funds prudently, you'll always be able to walk away from bad debt.
Okay, and somebody say that, if I can remember, about now, for example, taking loans to buy a car, and sometimes somebody say that unless it's paying back, about making the right decision on where to borrow and to what rate to borrow. And also, as you answer about the same, you talked about also buying off. We find there is always an habit of you borrow from this bank to pay this other bank. So at the end of the day, you create a chain of being a borrower. You dig here to fill another pit. Now, when it comes to making the right decision on where to borrow, and what are some of these factors that one needs to check on?
Also, you need to know why are you borrowing? Why, first of all, should you buy an expensive car and you don't have a house somewhere, you don't have land somewhere, and you back that vehicle in rental apartments? Maybe it calls to, instead of you, maybe for those who are starters, I know people, our young guys like vehicles. And they say a vehicle is a second wife. When you have a vehicle, any minute, you're always on the road. You want to go and greet a friend, you want to go party after party, and what have you. Maybe it is wise to do a paradigm shift. Instead of you going for the vehicle, it is good to go for the land. You see, in the factors of production, land is one of the factors of production. Land, and then also human labor. Why don't you buy land? Then, after buying the land, the proceeds that will come from the land will enable you buy a vehicle. And then also, there's a competition that I've seen today done as a very nice RAV4. So for myself, I would like to have a RAV4 or a Harrier, maybe to be done because he has a RAV4. It is good to be yourself. The reason why Dan has bought that vehicle, maybe somewhere Dan is doing some poultry somewhere, some broiler somewhere, and maybe the car is helping him to take the broilers to the market, to take the eggs to them. Never compete with anyone, and never do something because others are doing it. Just be yourself and know what is good for yourself. So the good thing is that instead of buying that expensive car, using that same payslip, it is good to change that and maybe buy a piece of land, or even take that money to money market, so that the money that will come there will enable you to pay the loans or to pay the rent of the house. So it's all about decision making. Wrong decisions, wrong consequences. So the choices you make today will make you maybe to suffer or to enjoy it. So it is always good to make the right decision concerning investment.
I'm tempted to ask you, at what point will we say a car is a liability, and at what point will we say that a car is an asset?
A car is a liability. Let me define what a liability is. Liability is something that takes money out of your pocket. An asset is something that puts money into your pocket. An asset is the best practices. If you have assets, it will inform now the aspect of cash flows. Anything that takes money away from your pocket is a liability. A car is a liability if it is not for commercial purposes. If that car only is used to maybe take you to a place of work and come back in the evening, you are going to use fuel. There are the services of servicing the vehicle. Immediately you buy a car from a car bazaar, it depreciates in value. And when you take that car home, that car always will need money to fuel, to service, and what have you. So the car is a liability because it will draw money from your pocket. Land is an asset. Because if you go and plant onions in the land, or even tomatoes in the land, it will bring money to your pocket. So it is always good to prioritize something which in the cash flows will make you liquid. Assets will make you liquid to have money in the bank accounts. But liabilities will draw away money from you. So a car is not an asset, it's a liability for this matter.
And in connection also with the same, there is always an issue of, we are here in town, for example, in Eldoret, you're in Nairobi, Nakuru, and all that. Somebody say that there is the issue of what you call dead capital. And when, for example, when you build a house back at home, basing on the culture or everything that Kipchumba must have a home back at home, a good house for that matter. And somebody said it doesn't make some financial sense to you explaining what dead capital is, and also with regard to the same. Does it mean that it's a wrong investment?
It's a dead capital because you've gone to maybe my place, Marakwet. I have built a house of 5 million. Who is living in that house? Nobody is living in that except the lizard and the, what we call that? The dove that builds somewhere in there in the house. I'm in Eldoret. I only go home for a weekend. If I build a mansionette at home of 5 million shillings, how will I get back that money? The return on investment, ROI. So there is no return on investment in that property. It is wise for me to build a house here in Eldoret that will substitute me from paying rent than building the same house in the upcountry. And then also in another fashion, if you can take the 5 million to the money market fund, the money market fund will give us 12.5% per annum. That is now the 5 million. It's like it is giving us like 500,000 every year. If you get that 500,000 every year, subdivide it into monthly. How much per month? It's around maybe
800 and something.
Let's say around 60,000. If you take that 60,000, that amount can pay for your rent here. So instead of you building a mansionette for a lot of money, take that money to money market so that you get what we call return on investment. So it's a debt capital.
Okay, and where do you now draw the line when it comes to, because all this hard work that you are doing in terms of you waking up very early in the morning, doing your businesses, running up and down, at what point will you enjoy this? If a young person can ask you on this, at what point now will you draw leisure and also living large?
Maybe when you are doing wealth creation, it is good to accumulate wealth in the first place. Then maybe after accumulating enough wealth, you have some passive income that will make you, even if you don't go to work, this money, there is passive income and the active income. The active income is the income that you have to go to work for you to be paid. I must go to work on Monday through Friday for me to be paid. And let me tell you, there are so many people when it is on Monday, there are so many people who hate to go to work. Monday, Tuesday are bad days for those who are employed. People hate to go to work because they are in the work that it's not of their own choice. So maybe before you build that big mansionette at home, it is good to have a mansionette at home, but it is good to make some wise decisions. It is good maybe to accumulate wealth. Say that if you can make money somewhere, passive money somewhere without you working, you can now even build that leisure home at home without any pain. But never take a bank loan of 5 million to go and build a house in rural areas. It is not wise. So it is good to pool the resources over time for even 10 years, 5 years. When you pool this money and then you have some passive income. You see, passive income is the money that you make from the assets that you already have. If you have some assets that give you income without working, then now you can squarely go and build a 5 million home that you are going to use when you go home. So let's prioritize making the wealth first of all.
Okay.
Then out of the wealth, we can build a leisure home.
Okay. Kipchumba, I see that our time is much spent, but now I want to let this go without asking you about now liquidity. And somebody say that money attracts money, and at some point you get opportunities when you have money in terms of liquid money. Are you from the school of thought that sometimes it's important to have liquid money in your account, or is it about investing? You don't have a reason to have money in your account.
Liquidity is the cash flows from the wealth you have. If you have now, let's say for instance, you have 3 million in money market. That after a month, that money bumps into your bank account. That is what we call liquidity. Liquidity is the ability to hold money in your bank accounts in the form of income. Like somebody who does business daily, he makes profit. That person is liquid. Liquidity is a place whereby the asset that you have makes you money. They don't take away money from you. So when you have good assets, I mean the good wealth and assets, that asset will generate some passive income, which makes you to be liquid. Being liquid means that you have the buying power. You can go to a supermarket, you swipe your card, you do your purchases, you even you have money. You have money available in your accounts, and this money are drawn from various income streams that you do not necessarily need to work for it. So it is good to be liquid.
Okay.
Yes.
And now, as we wind this now, from the experience that you have, from the journey in terms of wealth creation and also advisory that you offer in terms of consultancy, what are some of the critical, what are some of the advices that you can give people, and also what are some of the things that you wish you would have known earlier?
What I would have wished to know earlier is when I was in employment, if I had known that putting money in a stock market, putting money in money market, and buying of shares would work for me, I would have done that 10 years ago. 10 years ago. And also seeking consultancy from experts, from financial experts. I used to do things on my own. I'm like, if I was somebody who is in 30s, early 30s, 35, it is wise you make financial and calls which are right. By saving money in savings and schemes, investing wisely in the money market, actually making the right choices, and having a workable budget to guide you when you are making money. And it's also good to diversify your money. It's actually one of the ways of mitigating a risk. So if you can diversify your wealth, never put your wealth in one pocket. They say that never put eggs in one basket. So if you can diversify and you make sure that you don't only wait on the paycheck, you have some residual passive income. When I was in the bank, I never learned about the passive income. I would have been very far today with the knowledge I have. Okay. So it is good for young guys to always seek knowledge concerning financial literacy. And they make the right choice as young as they are. They can even run a parallel system. When you're employed, make sure that what you make in employment, you can also make it at home.
Okay.
Your left hand and your right hand should make money. So that if the employer today says that I am done with you, you can always walk scot-free and you can have some income
Yes.
that will enable you create wealth.
Wow, wonderful. Now, Mr. Kichumba, because I'm saying that our time is over, but now, as you give your parting shot and also advice to the young people, to the young entrepreneurs and people who aspire to create wealth, because that is a wish for most of us, what is it that you can tell us tonight, and also tell us about where can we find you? That being your camera, sir.
My advice to those who are watching me tonight is that you need to save wisely, invest wisely, and build a brighter tomorrow. And this calls for your self-belief, it calls for your consistency, and also discipline when it comes to wealth management. And in case you need any consultancy, you can feel free to get in touch with me, and I can help you wherever possible. Wealth creation and financial literacy is very important in your life journey. Thank you, and God bless you.
Thank you so much, sir, for coming through to the CEO show. We always look forward to be hosting you in the near future, and also we wish you best of luck in whatever you're doing, and we look forward to more partnership. Thank you so much. And to our viewers tonight, we are so grateful for you to be part of this conversation tonight. I'm sure you've learned a lot of lessons as usual, and as always, drop on the comment section, tell us what are some of the lessons or the take-home lessons that you've gotten tonight from our guest on the 56th episode. And we always look forward to bring you more and very, very exciting guests in the near future. Thank you so much for being part of this. To our YouTube viewers, thank you so much for following it up, and also on YouTube, thank you so much. And also for Facebook, thank you so much. We are really grateful for making this happen every single Tuesday. Looking forward once again to us, and also to have you come next week. We have another great and amazing guest prepared for you, talking about another topic. Let's keep moving. Let's keep grinding. Let's keep on making this happening. I was your host, Dan. May you have a good night, and God bless you.
Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show. Hosted by Dan. Business Minds, pioneering and inspiring entrepreneurs. Creative talks, CEO insights, success stories, value markets, and financial education. This is the CEO Show.